Assalamualaikum and a good day. What we are going to do is to recap on how do we do basic consolidated statement of profit or loss. There are two examples, and these are very basic examples of how do you consolidate two profit or loss statements between two companies, and that's definitely because one of the companies is the parent and the other is subsidiary. Okay, so as you can see here, the requirement is to prepare the consolidated statement of profit or loss. Okay, we can ignore the movement on retained earnings because that's not what we are going to cover for this recording. Yeah, PICO acquired 75%, which means this indicates a control of the ordinary shares of ESCO. That means ESCO will be the subsidiary of PICO. Okay, the control exists here because this is more than 50% ownership, okay, on that company's incorporation in 20X3. Now, first thing first, the moment we know the ownership percentage of the parent, that automatically gives us the percentage for non-controlling interest, which is 25%. Is that important? Yes, that is important. We are going to use that in the last working later. So please focus. The summarized statements of profit or loss of the two companies for the year ending 31st December 2006 are set out below. So you can see these are actually two separate individual accounts. P&L for PICO and P&L, profit and loss, for ESCO. Okay, they are actually two separate individual accounts, but we put this side by side because you want to consolidate them. These two columns will become one. That's why we call it consolidated. When we consolidate, it is as though the two accounts become one, representing parents lah, the parents of the group. And this is going to be very easy. All you need to do is just to total up everything. The revenue of PICO plus revenue of ESCO. The cost of sales of PICO plus the cost of sales of ESCO, and you will get marks just by doing that. This is like a just plus minus exercise, all right? But the last part of this exercise will be a little bit difficult when it comes to understanding it. But actually, relatively, it is still easy as compared to a more advanced discussion on the same topic. Okay, let's do this then. So I have prepared an Excel for us, which is this. Okay, so this is PICO. We are going to consolidate for the year ending 31st December 2006. Yeah. So you write down the name of the group, assuming the parent's name will be the group's name, and the 31st December 20X6 just now, kan? And then the revenue. Okay, let me see what is the currency. Dollar. This is in dollar. Okay, I'm going to put dollar here. So just do it. The revenue will be 75,000 and 38,000. 75,000 plus 38,000. Is that all? Yeah, that's all. Okay, and then 30,000 plus 20,000. Okay, maybe to make this clearer, I'm going to format this. Don't need the decimal. I have a comma there. The cost of sales just now again, sorry, what is that again? 30 and 20. In the exam, you can put bracket there to show that this is a negative figure, or that you will have to deduct the revenue from the cost of sales. Yeah, but I'm using Excel, so I'm not going to do that. I can do that, but I'm going to avoid that first. And this is definitely easy. Revenue minus cost of sale, you get your gross profits, right? And then operating expenses. Okay, this is a bit different, my pro forma. So I'm going to change it to admin expenses, but the working is still the same. 14,000 and 8,000. Just total up everything. And therefore your profit before tax. Is there any other thing? No more. Okay. Profit before tax is equal to gross profit minus admin expense. Be careful with your mathematical operation. Do you deduct or do you add to the figure? Okay. And in tax, or they call it income expense, it means the same thing in general. You have income taxes, kan? So 10,000 plus 2,000. Okay. Therefore, profit for the year will be profit before tax minus tax. Then you have profit after tax, which is basically a profit for the year. Now listen. This is the bottom line, right? This is the last part of the P&L, profit and loss statement. Okay. However, because this is a group account, consolidated, right? This is one new thing, which is a little bit advanced as compared to individual P&L. So what you have to do here, listen, yeah, you have to find the part or the portion that belongs to the NCI. So when you go back to the question, I told you earlier that if the parent holds 75%, therefore the NCI will be allocated 25% of the profit. But listen, this is very important. You are not going to take this 25% from 29,000. No. Why? Because inside 29,000, you have the profit of the parent and the subsidiary. Remember all this that we did just now? We total up those of the revenues, the figures belonging to the parents with the figures belonging to the subsidiary. Okay, when it comes to NCI, the portion for NCI will only come from the subsidiary's portion. That's why you cannot do like this. This is equal to 25% multiplied by profit for the year. You can't do that. Because when you do that, you are giving 25% of parents' profit to the NCI, which is not right. NCI does not deserve that. It only deserves the profit portion from subsidiary. So what do? Delete again. And again, you will always calculate NCI first, then only you calculate the equity holders of Jessica. Okay, now listen, before that, actually, the total of this, equity holders of Jessica, which simply means the parents, the total of that plus NCI will be the same, 29,000, will be the same. But now we want to know out of 29,000, how much belongs to NCI, how much belongs to equity holders, that's all. Okay, but then again, that's not how you apportion, okay? That's not how you allocate. 29,000, 25% goes to NCI, 75% goes to equity holders. No, that's not how you do it. Okay, so two things here. Number one, that's not how you do it. Taking 25% multiplied by 29,000. I've been repeating that many times already. Number one, I'll tell you what is number two. Only two things and then we are done. First thing, that 25% you will only take from the profit of the subsidiary, not the total of subsidiary and parents, which is this figure. So when you look at the question again, the profit for the year, this is written and you just ignore that. Profit for the year, 8,000 belonging to the subsidiary, 8,000. That is the figure, 8,000. 8,000 is from the subsidiary, whereby the NCI deserves only 0.25, 25% lah. So that is 2,000. Therefore, automatically, I told you, the equity holders will be the balancing figure. Okay, for the total to be 29,000, if NCI owns 2,000, therefore the balance will be 29,000 minus 2,000. This is the answer. That's it, and we are done. This is your consolidated statement of profit or loss for the year ended 31st December 2006. Okay, so you have answered the question. At least the first part, not the movement on retained earnings. We are not going to cover that. Okay, having said that, let's go to the second question and you should be good to go. Okay, Jessica. In this second example, it's going to be exactly the same, except there will be two additional adjustments. There will be two additional adjustments, but you don't have to worry about that. Okay, I mean, we are going to discuss about it, and I hope I will make it clear. We have done this in the class actually, but I believe maybe you need, not maybe, of course you will need more exercises, hence why I'm recording this for you. Jessica Co, before that, prepare the Jessica Group statement of profit or loss. The same question. So now you have the percentage, 75%, NCI therefore is 25%. Okay, Jessica acquired part post because 25%, that means part post automatically is the subsidiary. The draft statements of P&L, meaning two separate accounts for the two companies for the year ended 31st December 2087 are shown below. 2087, I've done that. So let's do this. This is going to be in million dollar, yeah? So be careful with that as well. This is going to be in dollar and it is in million. Okay, maybe I can bold that. Maybe I can also format that a bit. Okay. First thing first, revenue, same thing, 7,005 and 3,000. Settle. Cost of sales, 4,000, 1,006. That's all. Yeah, that's all. That's all we need to do. Why are you so nervous, right? 4,900. Okay, operating. In this case, we use is it the same? Yeah. Okay, good to know. Same term. Yeah. Sometimes you may have different terms lah, like administration cost or distribution cost. It's just the same thing, right? You just follow the pro forma that you have from the question. The only thing that you have to do is to consolidate. In other words, it means to total up, but not everything you can total up. Okay. For instance, the NCI later lah. Can. Okay. Anyway, let me just continue. Operating 2,500. And therefore, your profit before tax is gross profit minus the operating expenses. Tax will be 300 plus 120. And profit for the year will be, okay, sorry, I don't have to see that. I just have to calculate it from here. Profit before tax minus tax. 1980. So what do you do now? Same thing, NCI, 25% kan? The same thing. Okay. Coincidence lah, the two questions, this is 75%. If it is 80%, then NCI, 20% lah. Okay, this is a logical thing to do, okay? So because this is 75%, that means NCI will have 25% of the subsidiaries profit, yeah? Subsidiaries profit. So what you will do is, let's look at the question. Profit for the year is 780. 780. Therefore, I know I have not made the adjustment. Wait, yeah, I have not made the adjustment. I'm going to do that after this. I just want to continue with the same working we are doing first. 780, yeah. Okay. That's it. And again, this is going to be the total will be the same, 1980. And therefore, this will be the balancing figure, kan? The equity holders means the parents lah. If NCI gets 195 from the total 1980, therefore the balance when I deduct kan will belongs to parents. That's it. That's it. Right? Okay, now, but listen. When you look at your question, there are some adjustments. During the year, Jessica Co sold goods costing 3 million to Pat Post Co for 5 million. At the year end, 50% of these goods remain in Pat Post inventory. So there are two things here, and we have discussed this in the class. But let me recap. Let's do the easiest one first. We call it intra-group transaction. Let's forget about the cost first, guys. This one, the cost. I'm not going to talk about the cost now, not yet. Let's do the easiest thing first. What is that? Jessica Co sold goods to Pat Post, betul tak? So think about it this way. Jessica Co sell or rather sold to Pat Post. What's the figure? 5 million. So only two things here. Okay, why do you have a spike there? Doesn't matter. 5 million from perspective of Jessica, that will be Jessica's revenue. From Pat Post point of view, it will be the cost. Betul tak? Jessica seller, Pat Post buyer. So the revenue to Jessica is the cost to Pat Post, but the figure is the same. I sold to you something which costs, the price is 100 ringgit. So to me, because I'm the seller, 100 ringgit is money in, cash inflow. Okay, but to you, that same figure, $100 is your cost. Both of these must be eliminated because it is within the group. Okay, I have explained about this in the class. So what do you do with the 5 million here? You deduct revenue, you deduct your cost of sales. That's all. Okay, then let me go to the answer again. Because I'm using Excel here. When I change here, every other thing will be changing as well. Okay, so this one, revenue again, -5. Why -5? Because this is already in million. I get the answer. What about cost of sales? Also -5. That's it. You see, inside revenue here, this is the figure of parent, this is figure of subsidiary. It doesn't matter you minus 5 first, then you plus 3,000, or you do like this. Doesn't matter because this is plus and minus. Likewise, actually, 4,000 cost of sales of parent, it doesn't have any adjustment, but this 1,600 actually is the cost of subsidiary. You deduct 5. You deduct 5 from the subsidiary, you deduct 5 from the parent. But for the parent, it's the revenue. For the subsidiary, it is the cost of sales. Okay, that's it. That is something called intra-group transaction. Okay, and we are about to finish here. Lastly, this is perhaps more difficult. What happens here is that, listen, yeah, what happens here is that Jessica Co sold goods costing 3 million, meaning when Jessica Co bought the goods from someone else lah, the supplier of Jessica Co kan. Jessica Co paid 3 million. This is the cost to Jessica, to the parent. But when Jessica sold this to Pak Post, the selling price is 5 million kan. That means Jessica makes profit of 2 million lah. 5 minus 3, simple maths, my dear, 2 million. Listen, but that 2 million profit is considered unrealized. Okay, you don't really get it because you are actually selling this to your own group member lah, in that sense kan. Your parent selling to subsidiary or the other way around. So you have to eliminate that as well. However, the amount that you have to eliminate is only the amount of closing inventory. Closing inventory. Listen, this is the profit kan? This is the profit. At the year end, 50% of these goods remain in Pak Post. Jessica sold to Pak Post. Pak Post has this 5 million of goods lah kan. The value of inventory that Pak Post bought tu, nilai dia, the value is 5 million. And out of that 5 million kan, only half of that has been sold to outsiders lah, to third party. Okay? Because only half has been sold, you are not considering those that you have sold, but you are talking about those that are left. 50% of those are left kan. You do not multiply with 5 million, the selling price, you multiply with the profit. This is what we call unrealized profit. 2 million multiplied by 50% because 50% has not been sold. Therefore, your profit, 50% of it has not been realized. Tak dapat lagi, tak realize, tak direalisasikan lagi. That's what it means, okay? Therefore, simple maths lah, 2 million multiplied by 50% maknanya apa? Half of it lah, which is 1 million. Okay, so the figure that we need to use now is 1 million. Okay, but now, what is the adjustment that we will do? Listen, and catat. Unrealized profit will always be added to cost of sales. Just now, intra-group transaction, 5 million just now kan? Minus revenue, minus cost of sale. Deduction kan? Itu intra-group transaction. Now, I'm not talking about that. That is done already. I'm talking about what? I'm talking about unrealized profit. What's the figure? 1 million, and you add, tambah, add this figure to the cost of sales. So let me do this. Cost of sales kan? Add back 1 million. What is that 1 million? Unrealized profit. That's it. I think the figure is changing. Kan? Because this is all related. Before I end, just to make sure that you understand this, let me change the question a bit. Let's say it says Jessica Co sold goods costing 4 million. Sorry, costing is the cost to Jessica lah. When Jessica bought it, the cost is 4 million. The cost is to Jessica, And then when the goods, after the goods were bought, Jessica sold it to Pak Post kan. So let's say this is sold at 8 million. So what will happen, guys? What will happen? First thing first, this 8 million is revenue to Jessica. It is cost to Pak Post, intra-group transaction. So if I change the question, kan, what will be your answer? Revenue just now? You do not minus 5, right? You minus 8 lah. Because the selling price, revenue to Jessica is 8 kan? You minus 8 lah. That's it. And then the cost of sale also, you minus 8 lah. Nampak tak? You minus 8. Okay, number 1. I'm changing the question so that you can see how in different situation, of course, the figure will be different lah. What is the most important here is that you understand why do I calculate it that way. Okay, here, secondly, intra-group transaction done, you minus revenue, you minus cost of sale. That's it. Now, unrealized profit. So, Jessica, the cost is 4 million, but when Jessica sold, the selling price is 8 million, that means profit berapa? 4 million lah, simple maths, 4 million. Let's say it says what? It says at the year end, okay, 75% of this good remain in Pak Post inventory. Meaning after Pak Post bought from Jessica, he has sold 25% of that. Only 75% remain. Listen, for unrealized profit, you are not concerned with what has been sold. Okay, you are concerned with what has not been sold, what remains in the inventory, the closing inventory. In this case, 75% kan? So dia kata 75% goods remain. If I change the question, at the year end, 75% of the goods has been sold. Then you don't take the 75%, you take the 25%, because if 75 sold, so 25% remain. Do you get that? But now it says 75% remain kan? So you take that one lah. The percentage is the percentage that remains. So 75% kan? The profit 4 million, okay? Out of this total profit, 75% has not been sold kan? That means 75% has not been realized. So how much is the figure of the profit that has not been realized? Guna calculator. 4 million multiplied by 0.75, that's 3. How did I get 3 million? 4 million total profit. I'm not gonna add total add kan? Okay, unrealized profit you would add to your cost of sale. Jangan tidak, add to your cost of sale. But how much? 4 million in total. You only add those portion that has not been sold, which is 75%. 75% multiplied by 4 million, tekan calculator, you will get 3 million. So what do? Get 3 million kan? Oops, sorry. You will add to cost of sales. That's it. That's the end of it. Thank you, everyone.